stay the same for now. But what will all that mean? We'll discuss that a little bit later on. Right now, though, Deloitte released its Africa in 2018 outlook this week. It says that emerging markets become an engine of global growth last year. And even though South Africa has been underperforming, this presents a significant opportunity. To discuss this, I'm now joined by Deloitte's Dr. Martyn Davies. Thanks very much for joining us.
Good to be
Welcome
here.
to you. So this report came out this week, but you had a gathering of people, interested parties today.
Yes.
I'm going to ask you about that, but perhaps you can comment, because it is good news, I guess, for us that we have Lesitsha Kganyako now sitting as the chair of this all-important committee of the IMF. In the context of what we're going to discuss, emerging markets, the role that they can play, it must be good to have a guy like him sitting in a place like that.
Undoubtedly, Peter, it's testament to such as one of our best. And as I always say, the emerging market story is a governance story. And there's very few institutions as well governed under his leadership and his team as the SAB. So, but again, just a comment, it seems that when we have such eminent people moving to such eminent positions, and the IMF, it was mentioned in your news feed, founded in 1945. It's a key Bretton Woods institution. It's kind of ironic to contrast some of the political rhetoric we have in this country, which is very anti-Western, particularly from the ruling party. And yet here's Lesitsha chairing a key committee at the IMF, which is effectively at the forefront of a Western institution, a Bretton Woods institution. That's the IMF. It shows how out of sync with reality some of this political commentary actually is.
All right, so what is the outlook then for emerging markets in 2018, given that, as you said, sort of hinted, 2017 showed us that we're the go-to kind of part of the global economy? Well,
if you just rewind, put this in context, back in sort of 2013 May, we had the taper tantrum as interest rates sort of rise, or the indication of interest rate rises in the US. We remember our currency blew out, and it's been a tough few years. We have the commodity super cycle coming to an end around a similar time, early 2013. Oil price dropping significantly from July 2014, and that's impacted the entire sort of west coast of Africa. I think Nigeria, Angola, and many other Western African economies, which effectively went into freefall. It's been a tough 3 years, Peter, and it's, I think, from 2017 we start to see turning the corner. But just to repeat, it's a rising emerging tide is not lifting all boats. We're seeing certain laggard economies in emerging markets. We're seeing the likes of India and China again driving EM growth predominantly. But as I said, the emerging market story is a governance story. The laggards would be countries like Brazil, South Africa, Russia, Turkey, and all for exactly the same reasons, often politically inspired or cause self-inflicted wounds. So we are lagging somewhat. Maybe a 1% growth rate, roughly, we're targeting 2018 is by no means acceptable. And we need to drive growth in this country and not just be sort of commodity price takers will get us to 3%, but think 4, 5, 6, or even Asia style 6, 7% plus. So mixed bag at a macro level, but the macro is much more enabling. Commodity prices are upticking, oil prices up to 70, which is very good for West Africa at least. The global macro is strong. US economy, dare I say, despite Donald Trump, is doing incredibly well. China's robust, India's robust, Europe has recovered. There's no reason why this macro, this tailwind, should not facilitate or at least help our growth here in South Africa as well.
All right, so what you're suggesting is that there's enormous opportunity, but we need to do the right things. What are the quick wins that we can get out of this wave that's going towards the emerging markets?
There's no quick win here. I mean, Peter, we talk about structural reform. We spoke about that at the Deloitte conference today. We had SMB talking about the imperative need for structural reform. You can't use the phrase structural reform without talking about state enterprises. Radical, I use that word, reform is required of SOEs. Again, think governance. The debt is a significant problem. Debt ain't going to go away anytime soon. There's no fiscal space for government to spend our way out of what is still a de facto recession. I say that because our GDP growth rate is lower than our population growth rate. So effectively on a per capita basis, you're actually becoming poorer. So we need to fix that urgently. A structural reform, ultimately sensible reform. Marketization, good governance of SOEs, trimming down and a more effective state sector is required. In certain instances, enhanced governance in private sector, of course. But ultimately, it's about getting what we call the political economy of growth, in getting capital, domestic particularly, of course foreign as well, to be more confident to invest. The growth going forward, the short term, if we're looking for it, can only come from private sector capital, because the public sector capital has all been spent, I'm afraid.
And I suppose, I mean, you know, it's simple things like power. You know, you hear these stories of Nigeria, huge population, growing middle class, but companies one after another going and coming back because so many constraints. And I guess this is across the continent.
Well, you know, continental, casting on it a bit wider, or a view a bit wider, Peter, is that, you know, again, 2017, the three key economies sub-Saharan Africa, South Africa ourselves, a regional hegemon, Nigeria in the west, Kenya in the east, all of whom had a synchronized sort of, you know, we couldn't get into gear. Kenya had its own political issues with elections and post-election sort of uncertainty and strife to an extent. That's somewhat stabilized now. Nigeria, policy uncertainty, sort of almost errant monetary policy. The health of the president was a major issue with Buhari. And South Africa, leading up to the ANC Party Congress, massive political uncertainty, policy drift, if you will, and no decisions been taken, or decisions been taken, but erroneous ones. Now we see that hopefully corrected post-December with the emerging leadership in the ANC, the ruling party. Kenya stabilized, green shoots in Nigeria. So from a sub-Saharan Africa perspective, the sort of the tripod, if you will, these three major economies are now starting to turn a corner, albeit slowly. Not a quick wins, but again, as we said, taking advantage of an improved macro, if not a tailwind, certainly a tail breeze. But again, it's about the domestic structural reform I come back to that will really drive more inclusive growth going forward. And that's ultimately the sort of...
We're running out of time, but I don't know if you can very briefly, where do we need to start building for the future? You know, Rwanda's already set itself up as a knowledge economy because they don't have the resources that we have. The fourth industrial revolution is in play. Where should the rest of the continent be sort of structuring itself going forwards to be able to take up these opportunities?
Well, the commodity story is so 19th, 20th century. It's going to come from human capital, enabling states, building effective states which allow human capital to be unleashed, and it's going to be services driven, and to an extent in certain cases, more East Africa, manufacturing driven. But there's no one solution here for a very disparate, heterogeneous continent that we have. We're incredibly fragmented. And I'm hoping, you mentioned Rwanda, small countries like Asia. It wasn't the big economies, China, India, that led the charge of reform and liberalization. It was the small countries. It was Korea, Taiwan as an economy, Hong Kong as an economy, Singapore, that set that tone for reform, which resulted in peer pressure and the rest of the region coming along later. What about, we have Rwanda, Mauritius, where are the other small economies driving reform agenda, which the larger countries have to emulate? I think that's sort of a thought going forward that we should look at when looking at our continent and its development.
Dr. Martyn Davies, we're going to have to leave it there, but thank you very much indeed for giving us your insights and the Deloitte Africa 2018 Outlook. Thanks so much for your time.
Thanks for having us.
All right, so Francis,